The way ahead, that's the theme. Why did you define that for us? What does that mean?
Well, this is our 23rd edition for Greater China Conference. We've been doing it for 23 years. I think with the exit of zero COVID and some of the macro policies that we are seeing tilting towards growth, is signaling clearly the way ahead for the Chinese economy. And that excites our clients and, of course, ourselves no end for this particular period.
I want to ask you about what's happening. Certainly it's affecting a lot of businesses across the border on the mainland with this surge in virus cases. How's your team doing temporarily? Any changes to the way you're doing business right now?
No, we have 1,400 of my colleagues in China. It has not affected the way we work. Of course, we have some infections as well. As with any of the cycles that we have experienced globally, you'll see a peak and then it'll plateau out. I think China is still going through that period. So when we look at the economy, we think that with the exit of zero COVID and together with some of the growth initiatives, I think the power pack of some of the growth initiatives will only come possibly towards the tail end of Q1. And that's because there's massive migration or transmigration of people during the Chinese New Year period holidays, and also low productivity during the 15 days of Chinese New Year festivities, together with more infections, we think. So real growth will come in, tilting towards maybe starting of Q2.
I mean, you're in the business of meeting people. You need to see your clients in person, ideally speaking. Obviously, the last 2-3 years has been challenging in that regard.
Yes.
The border's reopening partially, Hong Kong and the mainland. How does that change initially?
Oh, massive. We were still visiting our clients from Hong Kong to China or even Singapore to China, but obviously taking the hit on quarantine, which was difficult, but it's something we have to do, face-to-face meetings. I think this round is much easier. Last night when I was coming into Hong Kong from Singapore, although it's the first day it's reopened, you can already see the activities in the Hong Kong airport. So I think that bodes well for both, not just Hong Kong, but for the whole region. And if I may say globally as well, because being a 17 trillion economy, what happens in China, especially on policies such as exit of zero COVID, matters to the world. It will help tremendously in the world that has seen a massive onslaught on trying to contain inflation, etc. This policy from China is going to positively impact the world.
I mean, it's hit, to your point, it's the policies in the last 2 years have hit confidence, not just in the market, obviously. Wealthy clients, for example, like yours, how have you noticed changes to investor behavior, especially among your wealthy clients? Are there preferences where they prefer to put their money, geographically speaking?
Well, the last 2 years have been very difficult, I think, for any global diversification, for example. The US were doing well 2 years earlier, and then it has to grapple with inflation. And this year, if you look at it, it may go to tilt towards a shallow recession towards later part of this year.
That's the assumption?
That's the assumption.
Soft landing?
Soft landing, and short one. And then for China, it was really more of a self-imposed policy adjustment on common prosperity, together with very strict COVID mobility restriction. That, of course, has impacted China. But I think overall, such adjustment to policies and economies are to be expected with the various economies. Getting out of it, I think China will be stronger this time around. For us, our clients have been fully diversified. A difficult period for most of our clients and for ourselves, for any banks for that matter. But I think that diversification has helped to cushion off some of the blows rather than being focused in one region or one sector. That has helped our clients and us a lot.
Talk to us about headcount, for example. We just heard from one of your peers, Goldman Sachs. They're looking maybe at some reductions in headcount. We all know, of course, your other peer, Credit Suisse, and the saga that they're going through. Are you looking to add talent this year, net?
We are. We clearly are. We are a different house. When you are the preeminent wealth manager of the world, where we manage more than 3 trillion, I think it's absolutely important that when we look at all the elements before us, we are here to grow. And it's more of a franchise business than really hunting.
Okay.
So it's a very different setup for us than the other firms that you have mentioned. They are great firms, of course, but we are all on different paths as to how we craft out our strategy, etc. So for us, yeah, I'm here to hire.
Can you give us a number, rough percentage, in terms of, well, growth of the business and maybe what that manpower complement looks like?
I typically do not give focus on numbers on headcount, simply because we are here to farm what is available, what is the best. Of course, we plant our own and grow our own in terms of graduate trainees program. That consistently we have been hiring every year. But for the rest, it really depends on the talents that are available and also the relevance to where we are growing in terms of sector and regional coverage. So it's quite different.
Business-wise, what do you expect to grow, though? Wealth management, asset management, IB. Is there any one of your major revenue streams that you feel most excited about?
I think our wealth management will power away this year because of what's happening in China, opening up and creating a more positive outlook for the whole markets, for investors. Investment banking, I think on the banking side, should recover as well. And on the global markets, of course, volatility helps. I think this year, because of the varying inflation threats, etc., I think we'll still see a fair bit of volatility that will be good for our business. Asset management, we have to rebuild, and we have resettled our baseline last year. So now it's a case of adding more mandates into the way we manage our assets. So I think overall growth should be all right for us, but I think it'll be powered away by wealth management.
Priorities within asset management, since you talked about that seems to be a place that you're looking at more closely.
Well, there are three areas. I think one will be sustainability. I think that's a key thematics. The second one is new economy. In Southeast Asia, there's still a lot of unicorns that are very much not just growth, but value-driven as well. They have actually changed tech. Digitization for us is key. So we'll continue to focus on those areas across 13 locations in Asia. Hong Kong is significant for us. We are helping Hong Kong to re-kickstart by sponsoring the Wheel of Good Fortune, which will start tomorrow night. And I think that will usher in an accelerated view about Hong Kong being vibrant, etc. I've always told my colleagues in Hong Kong, it's not that Hong Kong is back. Hong Kong was never away. You know, Hong Kong was never away. Hong Kong has always been very resilient and vibrant. For my business, Hong Kong continues to grow. Yeah. And that's important.
Well, except for the GDP numbers, which was, I think, down 3% last year. I saw the poster coming in of the wheel. Very quickly here, biggest risk to the business, biggest risk to markets. Could be the same thing, could be different.
Biggest risk to business, the slowdown. Still trying to grapple with inflation, resulting in some of the situation with currencies, for example, and different asset classes. The rest, I think, is manageable. A lot of discussion has been given to the Taiwan and cross-strait relationship with Taipei, together with American interests. I think that should be all right. You know, that should be all right. There will be a lot of discussions on it, but through the cycles, we have seen actually pretty stable. So I don't think that is a big risk factor that we are seeing.